If you've been seeing assignment listings pop up lately, here's the truth. Toronto assignments are one of the most illiquid parts of the market right now. In many cases, the seller only exits by taking a real loss and offering incentives tied to the deposit. Today, I'll break down what an assignment is, what changed over the last few years, and how builders control the process, and I'll show you the real example. An assignment sale happens when someone buys pre-construction from a builder, then sells the purchase contract to a new buyer before final closing. The new buyer takes over the contract with the builder. The original buyer then steps out. The building may still be under construction or near occupancy, but now the new buyer is responsible to pay the occupancy fee and close on the project. Although the original buyer is still responsible if the new buyer doesn't close. Here is some definition. Original buyer is that's the seller of the contract. The new buyer is the person taking over the contract, and occupancy is when you move in and pay occupancy fee, but you don't own the title yet. It's not registered yet. And final closing is the final title transfer and registration, and that's when the mortgage funds and you have the actual ownership of the unit. Back in 2012 to 2019 roughly, prices rose month over month. Investors treated pre-construction condos and houses like a leveraged bet with deposits. Many people just bought pre-construction to just assign them before occupancy. Buyers lined up because resale inventory stayed tight. When the market rose, the assigner sold the contract for a premium, then kept the deposit return plus some profit. People made a lot of profits in some cases, couple of $100,000 by just owning a property for a couple of years. This strategy looked very simple because market was running hot for 10 to 12 years. Then the environment changed fast. Back in 2022, when we saw interest rate rose rapidly, the first thing that happened was the sale of new properties stopped. Literally, like nobody was buying any more pre-construction, and then the resale inventory rose and prices starting to drop. In terms of the assignment market, buyers looked at the assignment and was thinking about the appraisal risks and closing risks because some builders couldn't close and then the appraisal was coming short. That alone shrink most of the buyers' pool. They also compared an assignment against the resale listing, and that closed faster and feel cleaner because resale is much faster, right? And you just clean, no occupancy fee. Resale also gives you real market comps and fewer moving parts. Another point was assignment friction became a deal killer. Even if a contract allows assignment, builders usually control the process with consent, timing, and fees. Those rules slow things down and reduce exposure, and less people were interested in them. Because builders, sometimes they would refuse it if the assigner offered a lower price, or like to the assignee, which is the new buyer, the builders would reject it, and sometimes it would take months for the builders to approve the assignment. So it becomes very like friction. It's not an easy deal to do this. Assignments are not like a normal resale. In most deals, the builder decides if you can assign, when you can assign, and how you can market it. These are some of the points that builders control. Builder approval required. There is an assignment admin fees. There is restriction on advertising and where the listing can be shown, and rules on timing. Sometimes only a short window close to occupancy. Sometimes rules around pricing that don't match today's market. Here is something many people miss. Even if you assign the contract, you might not be fully off the hook. If the new buyer fails to close, the buyer often goes back to the original buyer first. So you need the paperwork done properly, and you need a lawyer involved early. Here, just like I want to show you some like a sample assignment contract, right? So you can see there's lots of provisions. For example, on Schedule A, just look at how many provisions we have here. You know, like all different conditions, how the assignment agreement is reviewed by the builder, by each lawyer, and even at the end you can see you will do all the calculations. So it's a totally different contract for assignment. So now let's go back to the marketing. So why do we see these painful losses and deposit incentives? Because buyers want compensation for risk. Assignments involve builder rules, timing pressure, and financing uncertainty. In this market, the buyer usually has options, so the assignment has to be priced like a distressed sale in order to get an eyeball. Let's look at some sample listings here. In Brampton, it's a detached property. You can see here it was previously 2.6 million purchased, and now they're offering it at $2 million. It's quite a bit of loss, right? Next one, fire sale, 407,000 loss, right? It's at Bloor and Spadina. The original price was $957,000. The deposit paid was $143,000. Now they're asking $550,000. So total of $407,000 lost. That's a lot of money. Think about it. Like somebody's saving essentially just fully wiped out. Another one, 350 loss in Georgetown. You can see plus like the $100,000 cash back. You can see here we have a list price. It's 899,000, and the original price was $1,245,000. So we're looking at $350,000 lost on just this offer that they're doing. Another one, it says seller pays you $54,000 plus 20% deposit loss to close the unit. Original price is at $786,000. Now they're offering at $574,900. These are like just incredible losses we're seeing in the assignment market. Another one, original price $774,000. They're offering at $476,000, loss of $300,000. And that's quite a bit. On a $774,000, we're looking at almost like 40% loss here. Another one here, we're seeing here at the bottom, original price $900,000, and now we're looking at seller's listing price as $629,000, $270,000 loss. You can see none of them are on MLS, and those ones are mostly on Facebook, Instagram, and just private email lists, because builders don't allow to be publicly marketed on MLS. And behind these assignment listings, they all have some stories. Not all of them are speculators. Since pre-construction process takes 6 to 7 years, people's lives change, financing situation change, job situation changes, and some people can't qualify anymore, or they lose their job and they need to sell regardless of how much loss they will incur. That's why we're seeing some crazy losses here. But if you're sitting on an assignment and you need out, the first step is reviewing your agreement and your deadlines and understanding what the builder allows. You can also get in touch with me and I'll review the contract and see where and if we can post online. So these are the seller's steps from you can post online. So these are the seller's steps. Get the APS and amendments reviewed, confirm the builder's assignment process, timing and fees, price against resale alternative, and in some cases you need to price lower than resale to make it even more attractive for buyers. Also prepare a clean package for buyers, receipts, dates, fees, schedules, and clarity on occupancy and closing costs, specifically like the levies. And expect buyers to negotiate hard around price and incentives. If you're a buyer and looking for assignment, you can definitely find some incredible opportunities I just showed you in those listings. But you gotta manage the risks as well. So here are the steps for you to follow. Compare it to resale in the same area. Confirm occupancy date, final closing estimates, and monthly occupancy fee. Understand all closing costs and adjustments, and confirm builder consent and assignment fee, and use a lawyer who's done assignments before. Same, lawyer and real estate agents that know all the technicalities with regards to the assignments. Make sure you get your financing also in order. The assignment market tells you one thing about Toronto today. Liquidity is low and pricing power sits with buyers. If you want me to look at specific assignments you're considering, send me the details and I'll help you break down the risks the math and what a realistic strategy looks like.